Let's see if this works better. Can you hear me now, Slopey77 and Jose Vargas? Hello, hello. I think that solved the problem. Yes. All right. Perfect. Thank you, guys. I appreciate it. See, you guys do help me out. So that's kind of concerning that that wasn't working right, but nonetheless, we're here. We're back. All right. So let's take it from the top real quick. Bull market recovery or bear market rally? How do you know the difference? At some point in time, one of these bounces is going to be the bounce that gets us there. And so we have to be able to decipher and determine which one is the one. Which one is the one that's getting us back to the bull, and which one is just another bear market rally? We have all of these, all of these peaks and valleys, all these ups and downs in the market. And every time we get the slightest pump, somebody, they come out of the woodwork like, oh, I told you so, or we're so back. No, we're not. Okay. It's a fucking 2% pump. Deal with it. Get over it. Because guess what's coming next? A dump, as you saw this morning, right? So I don't want to see you get faked out. I don't want to see you get abused. I want to see you making database decisions. I want to see you not speculating and losing your ass. I want to see you protecting your capital, protecting your net worth, mitigating that risk, and making smart decisions. So in this stream today, I don't know if this is going to be the last one of the year. I can say it's the last one before Christmas. But I will do my best to, keep you guys updated. I will be popping in from time to time, but mostly with written analysis, I would guess. But I may get another one in before the end of the year, but probably not before Christmas. So I want to give you guys some insight, some ammo to follow. And again, glad to have you guys with me. Soapy, Jose, Steve, thank you all. Glad we got that worked out now. And Sabata, thanks for joining me. So again, if you have questions, or insights, by all means, please share them. If you have questions, I'll do my best to answer them. So let's go ahead and get into this and start sharing some charts. Oh, by the way, just right quick, so eager to get into this and dive in. Just wanted to share a couple of things with you. The huge holiday sale, Material Indicators huge holiday sale. It's coming to an end. Christmas Day. It's done. So if you want a chance to save big time, 33% on every single product, from monthly plans all the way up to lifetime plans. The longer you subscribe, the more you save. You save $66 on a monthly plan. You save over $2,800 on a lifetime plan, and anywhere in between, you're going to save lots of money. So take advantage of that. And also the tools, the other tools that I'm using, I use TradingView like so many of you do, and 3 commas, man, especially 3 commas for my automation. And even when I'm not automating trades, I like the 3 commas platform because it's just really easy to manage trades and see how everything's performing and monitor stuff from different accounts, et cetera, all in one spot. They're having a huge Christmas sale, 70% off as well. So be sure and check that out if you're interested in any of those deals. I will have links in the description down below. Now, let's get into it, start sharing screens and look at charts and see what we can learn from all of this data. Well, we can learn that I have certainly put in my 10,000 hours for you guys, 324 days in the charts out of the past year, and still counting, by the way. So that's good, right? Well, probably not good for my health, but it's good for you guys. And it's good for my portfolio too. So I posted something over the weekend that I felt like we were in a bit of a no trade zone. And that is this zone between really a couple of trend lines. I got a lot going on here. I want to try and simplify first, and then I'll reintroduce some of these other indicators to show you exactly what I'm looking at here. But the first thing I want to share with you is why I called this a no trade zone here. Between these two trend lines, we had our downtrend from really the all-time high. This is a slight adjustment off the all-time high, but this is our downtrend for since those big dumps back in October. And then we had this bit of a rally off of this local low, which is at 80.5K. And this was looking good. This got a lot of people excited, but we've had rejection after rejection from the 21-day moving average here. And so we were in this over the weekend, and I saw this as a no trade zone for a couple of reasons. One, the upside, excuse me, the upside is limited here, throttled, if you will, by the 21-day moving average. You can see this green line is coming, and look at the perfect confluence with the trend line, by the way, right? So I knew resistance would be tough here, and we had this fake out here this morning. I'm not going to lie, right? These are the things that test your conviction. I had an order in place to take some profit up here at the 21-day moving average, right at the trend line. So I did take some profit here at 90K. And I have more of that happening on the way up here at the timescape levels, where I also intend to take profit. And ultimately, if we can get there at the 50-week moving average, I still think that there's a chance that we do that. And I think that there's a good chance that it happens by the end of the year. Maybe it will, maybe it won't. But I think that this would be a good time and place for that to happen. And what makes me think of this, I don't know, what makes me, I guess something that makes me question my conviction a little bit, and this is why I don't get married to narratives. It's why I look at the data. Is this right here looks like good foundational support building, right here at this 88K level, 86 to 88 really. This looks interesting to me, and the fact that we're at this crux right here, interesting to me. And if you recall, a few days ago, I did a live stream on this December 17th macro reversal day thing. And if you missed that, I'm not going to go deep into it right now, but I encourage you to go back and check that stream from December. I did it on the 18th, but we talked about the 17th. The short version is, every year since I've been tracking this, and since I first came into the crypto sphere in 2017, we've seen this a major macro move, often a reversal on those exact days, or very close to it anyway, 16th, 17th, potentially the 18th this year. We'll see what happens. But this year, and this is why we have to wait for this to develop. It could go either way. This year we saw on the 17th and 18th, we saw both a rejection from the 21-day moving average, and we saw support from the 100-week moving average. So which one of those will be which one of those will dominate? This is what had me thinking that we were in a no trade zone, right? The 100 down here, the 100-week, and the 21-day. We were pinned between these two moving averages right here in this range, right in the crux of these two trend lines. So that's why this is a no trade zone for me. And now wondering, are we going to hold here for the year or break down, or might we break up and go upwards? Well, so I was sorry. Thanks for that, Rohan. Yes, it was great to act as a pantomime. Anyways, so this could still go either way based on resistance here at the 21 and support here at the 100. We're in a very, needless to say, we're in a very tight range. That 100-week moving average is at 85.5K roughly, and the 21-day is at 89.5K roughly. And so pretty tight range. So why do I think that we're still bear market conditions? Well, obviously nothing has changed in terms of where we are in the weekly RSI. It still sits well below that 41 mark. And we are still well below the 50-week moving average. These are two things that I need to see recover before I'm willing to flip back to bullishness. And if you followed me for any length of time, you know that I spend a lot of time in the bull zone. Okay, so I'm not a perma anything. I'm a chartist. I look at what the charts tell me, and the charts told me that we're in a bear market. Now, let's say we get this rally. Let's say we do break above this trend line here, and we go and we shatter some timescape levels. The yearly open is the first one that needs to happen. The 2025 yearly open, um, right? And look at what's happening here. We have now some confluence between the red 50-day moving average is hovering right around that yearly open timescape. Then we have the second timescape level here, which would be the first week of that Q1 open. And then we move into these other moving averages, right? So we have all of the moving averages are currently wound up. And you could see, so purple 200 up top, blue 100, red 50, green 21. So these are completely inverted. And it looks like we could see the green 21 and the red 50 intersect in a bullish manner here in the not too distant future, right? This is still a ways away, but maybe by the end of the year, these two could recover. The green 21 could recover potentially, and we could start seeing things work our way out. That's a possible scenario. But I want to show you something else on a higher time frame. And to me, the higher time frames are more tend to be more accurate. So depending on how you trade, if you're a macro trader, you want to look at the higher time frames. So on the higher time frame, we can see that the green 21 week moving average and the red 50 week average seem to be on a imminent path for a death cross soon. And I've actually drawn those out. Let's see what that looks like. See if I can find those real quick for us. Okay. So if we stay on the same trajectory, and that's, doesn't mean we have to. This is just some very rough modeling. But if we were to stay on the same trajectory, what happens here? Okay, we go another week. And let's see, 1 week. That's the end of that gets us to the end of the year. First week of the year, we're getting closer. Second week of the year, so mid January, these guys are on a collision course, and if this happens, I expect price to dump significantly, like a deeper correction than we've seen already. So I can see a scenario, and this is about the only speculation you're going to get out of me today. I can see a scenario where price does rally and potentially goes after these timescape levels and potentially even this high. It could happen. But once these cross, maybe we get a wick above to fake some people out, fake out and shake out, and then dump. Could it go higher? Absolutely. Could we go and even test, that all-time high zone? I don't rule anything out in this game. My gosh, if you've been in this for more than 10 minutes, you know that anything is possible. And from time to time, we do see manipulation that certainly supports that theory. So nothing is off the table. But what am I watching? I'm watching for two critical things to happen on the weekly time frame to say this is not a bear market rally. It would be that would be something that would point to a bull market recovery, and that is weekly closes above 41, that 41 zone on the RSI, and weekly closes above the 50-week moving average. I'm not talking about wicks. I'm not talking about nosing up above this for a day or 3 or 4, and then price dropping back and then pulling back down. I'm not talking about wicking above the 50-week. I'm talking about full a close and then full candle bodies above it to climb our way out of here. So barring that, if that doesn't happen, It's call it what you want. Short squeeze, bear market rally, whatever. Um, bull trap. All of those things are going to happen. I can promise you they're going to happen, right? I, I don't like to use the word guarantee always and never in this game, but the only the only certainty is that things are going, people are going to get shaken out. So be mindful of that and be watching for these key things to happen. Be watching for full candles growing above this level, and be watching for weekly closes with an RSI above 41 on that weekly chart to say, okay, now it's time to go, full bore bull. But until then, no, 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 we're not there yet. Let's see. Sabat is asking 43K fair value gap. Well, like I said, I don't rule anything out. Let's look and see where that puts us in the grand scheme of things. Oh, and by the way, a reason that I think that we could see some of that rally this week is we had a signal here, and it's still holding. Trend precognition signal. This is a tentative signal. Came in at last night's open close, and so this is indicating that, hey, maybe we're not going to go lower here this week. That would be invalidated for me with a flush below the 100-week moving average. So keep that in mind. But this is why I think we could see this rally happen this week. Now, as for downside targets, if that doesn't happen, right, or if we do get the rally and then we get this death cross and we see things break down, then I would be looking for downrange targets. And I've talked about this quite a few times in the past. All of these timescape levels are relevant to me. That's number one. Where the timescapes have confluence with other technicals, whether it's a moving average or whether it's other consolidation ranges on the chart. Those to me are stronger support levels, and to the upside, stronger resistance levels. So I'll be mindful of those. Now, let's keep in mind that historically, bear markets last, about a year. And so if we were to, I don't know, flush down to the 75K level, in the next couple of weeks, I would be thinking that we're going to go way deeper because just of the amount of time, right? It could take a long time for the bear market to develop. And so I'll be watching for that. I want to know how low we're going to go is to some degree going to have some time, has something to do with the relative timing of that happening. Now, I think that there's a chance that we see a rally around the midterm elections coming up in 2026. But all in all, again, I'm looking for weekly candles above that 50-week moving average and above that RSI down here. So back to this question about 43K being fair market value. There's an interesting range down here in the 40 to 45K range where we had some consolidation. We have some timescape levels in this range that also make that interesting. So it's a viable target. Is it the one that I'm most focused on? No, but that doesn't mean it's not. It might not be the one. I would tell you that at any given moment, these moving averages, right? These moving averages are constantly, moving. So where they are at the time of inflection will be something I'll be watching for, right? So where's the 200 moving average in the next next month? Could it possibly be around this 2021 top? Because this is a very very interesting level to me. 75K, everybody's already talking about 75K. And so sure, there's a viable reason for 75K. And to me, the most Interesting thing is that we had this double bottom around 75K. So that could be an interesting target. But I think if we go this low, then we're close enough for this yearly open to come into focus. I think most people will be focused on 70K rather than 69. I had this same discussion coming in to this bull market, to the past bull market, as we consolidated in that range for so very, very long underneath this 69K. So because of the amount of consolidation that we had here, I thought this was important, and I think it's a viable thing. So that would be one of my near-term targets. Um, but again, if this happens quickly, if we get there in the next month or two, then I think we're going way lower. If it takes us 10 months to get there, then I would feel good about that potentially holding. So as time goes on, where are we? Where are the moving averages at? The 200-week moving average is also one that often, but not always, serves as support. And here's an example of where it didn't, right? So that could be broken. But at the moment, that's an interesting target. And that is in the mid 50s right now. We had some brief consolidation um, in that in that range, 50 to 52. We had another double bottom here around 54. So this is also interesting to me. And where is this, by the time we get to that point? If things grind lower and lower and lower, again, timing has a lot to do with it. So ultimately, we'd like to see things continuing on an upward trajectory. Let me see if I have this other chart open. Hang on a second. Bear with me. Okay, so let's look at a lifetime chart and see where things sit. And I'm just going to expand out to this guy on the weekly and get some of this stuff out of the way. All right. So ultimately, we want to stay on a trajectory of higher lows. And now we're talking ultra macro, right? So that higher low means we're not going lower than the FTX crash, which was at 15.5. Do I think we're going that low? No, I do not. I don't think we're going that low, but I don't rule it out. So ultimately, you look to the next lower lows from where we sit now, right? And each one that we lose is going to be an indication that we are going lower. The one closest to us is at 74.4K, which is why people are looking at that double bottom I had mentioned to you. And then from there, it would be at 49.5. So we'll call it 50K, which is psychological in my opinion. 50K is more of a psychological level than a technical level. We had some brief consolidation in that range, not a lot. And then from there, the next ranges are going to be 25K, which is where we had really the last consolidation before this market really took off. FTX crash was down here, and we had a rally out of this, and then boom, up we went. So that would be very interesting to me, and I'd like to see things not go quite that low. So all of these levels that I'm pointing out to you are potential targets. We just have to see how things develop and the timing of everything. Zlov, are you overall bullish on the year 2026? Well, you want the honest answer or the one that makes you feel good? I'll give you the honest answer. The honest answer is my bullishness comes from finding buying opportunities, but I think price is going to be going down for most of 2026 with some rallies sprinkled in between. There will always be rallies, even in the bear market. So there are great trading opportunities. But I would say as a long-term investor, a long-term hodler, you're going to find, or I'm expecting that this bear market continues through most of the year. I I can see a scenario where Q4 we start to rise out of it. Now, there are a lot of variables between now and then. We know we have a new Fed chair coming in. We know we're going to see rate cuts. We know we have midterm elections. All of these things could point to bullishness, but those would be narratives. And if you've been listening to me for the past 2 months, I stopped trading narratives because the narratives can mislead us. I mean, if we're going to trade the narrative, we could trade the narrative that says, well, Bitcoin's only going to go up. And we have all of these things. We have this institutional adoption. We have Michael Saylor. We have Tom Lee. We have Trump and his desire to see things moving forward. We have rate cuts. Well, price has been moving against that story for quite some time. So this is why I've started to let go of the narratives and focus squarely on the charts. And so, yes, those are things that we should keep in the back of our mind on, our macro outlook. But if you're trading, trade the charts. Charts are going to guide us. So the honest answer is, I think we're in a bear market, and I think historically bear markets have lasted around a year. So if you want to say that this began when we lost the all-time high, the decline began in early October. The confirmation came on November 30th for me. That was my third confirmation. And so that's where I sit. Hope that answers your question. Have I found that horizontal or flat moving averages have trouble providing support? There's a lot of different theories on moving averages and a lot of different types of moving averages that we can use. I personally have been using simple moving averages, and a lot of people question, why I don't use an exponential moving average. For the way I like to trade, I find this more accurate for the time frames that I trade. And if you trade shorter time frames, you might find something else works better for you. Part of it is what I see in the charts, and the other part of it is just what I'm comfortable with, right? I have a sense of what works for me. I have a sense of how I think price reacts around these levels. And so everything lately seems to get overshot a bit to trick the algos and shake out the weak hands and essentially take money from people. So I never react solely to price passing through one of those levels. I look for closes, right? The candle closes. And today was a great example, right? I mean, today, and we talked about it on this chart here earlier, right? Today, we moved out of this no trade zone, and it looked a lot like price was going to break out, right? We cleared the trend line, we cleared the 21 moving average. But what kept me in my trade? What kept me, what gave me the conviction to stay in my trade despite having this this signal on the weekly chart that we could see a pump here? I'll tell you what it was. It was, in part, it's never any one thing, by the way. It's always multiple things. So in part, it's the imminent death cross that I see coming on the weekly time frame. And the other thing is what I saw in fire charts. I saw this liquidity, and I saw this liquidity replenishing. And so I nearly changed my target because it hit. I had a sell order at 90K even. It hit it, but I didn't get filled. And I almost changed, and I was like, let me just watch and see what's going on. And I saw support come in. A lot of times you'll see, let me turn this off so we can not see that tag interfering. A lot of times you'll see liquidity move around like this, right? So you see this, I'll even make it brighter so it's easier to see. So you see these blocks that come in here like this and this and this. These guys have no intention of getting filled, none whatsoever. But they somehow managed to push price up. I don't know if it's just an algorithmic reaction to this liquidity or other people see it in the order book, but this moves price. It moved it here. It moved it back up here. They pulled, it came down, right? They moved it here, price went up. So I was watching this and I saw um, ask liquidity coming down, exerting pressure. Look at this. It exerts pressure. This exerts pressure. This exerts downward pressure. And so those are the things I was watching that kept me in my trade, as it were. And I'm letting it play out. I still think that there's a chance that we will, over time, see these levels again. I mean, I certainly think long term price will get there and there will be another bull market and there will be more all-time highs. But in this, even in this bear market, I think that there's a chance that we make it to the 50-week moving average, at least for a test. I could be wrong. I don't have, I'm not betting the farm on that, right? I'm hedged. I'm hedged because I still have plenty of Bitcoin if we go up. And if we go down, I have taken profit between here and the 120s range. And so I've DCA'd my way out just as I DCA'd my way in. And I will, again, dollar cost average my way in as we hit key levels on the way down. Hope that makes things clear for you. Again, and this is not advice. This is just me telling you how I trade. Clarification, you meant flat as in the slope. So let me revisit that question. Have I found that horizontal or flat moving averages have trouble providing support? No. So a flat moving average is an indication that there's been some stability. So that's good, right? You want to see that. That's a consolidation zone. And those are levels, the longer you have that, quite frankly, the more strength that you're building. So that doesn't bother me at all. In fact, look at what we're seeing here. This at the moment, yes, it's still sloping. It's stabilized a bit. This is the most horizontal here, right? This 50-week moving average. And I bet it's probably pretty strong right now if price gets up there. So we'll see. Time will tell. Hope that gives you guys some things to marinate on and some things to watch for. Again, in case you missed it at the beginning. Well, for those of you who were here in the beginning, hey, thanks for setting me my audio snafu straight. Sorry about that. But I really want to make sure that you know what you're looking at as we head into the end of the year, because this stuff is going to happen. The volatility is going to continue, regardless of how you're positioned. So I want you to be watching a few different things. I want to watch the 50-week moving average. I want to watch the weekly RSI. And I want to watch this death cross as it develops. Okay. So all of these rallies, do with them as you wish or as you may. But just know, until we get full candle bodies, full closes above the 50-week moving average, and full closes above the weekly RSI at that 41 range. And when I say full closes, I mean full weekly closes. A daily candle above this, a wick above this 50 moving average does not do it for me. I want full candles growing above this level to entertain the idea of the bull market recovery. Until then, these are bear market rallies. They're short squeezes. They're designed to shake out weak hands. And you better believe that banks are coming on strong, and they are very happy to take your Bitcoin away from you. Don't let it happen unless you're trying to sell here, right? So sell as price is going up, buy as price is going down. That's how the smart money plays the game. Again, I thank you guys for following. Thank you for the ongoing support. I wish you all the very best holiday with your families. And we will undoubtedly get back in here before the end of the year. But between now and Christmas, just keep an eye on what's going on. And listen, spend some time doing what you love with the people you love. That's where the real value is. That's where real wealth is. And all of this stuff will be here when you come back. All right. Hope this helps you trade smarter. Don't forget, all of the deals are happening. Links are in the description. If 33% off everything from material indicators, like 50 to 70% off everything from Three Commas. I think TradingView also has a deal. Whatever tools you use, if you haven't renewed, this is the time of year to do it if you haven't done so already, because everybody's cutting prices. Okay. So thanks. Hey, Alex, I appreciate it. Same to you and to each and every one of you. Wishing you the best. Have a Merry Christmas and a happy, healthy, and prosperous new year. Let's trade smarter together in 2026.